Hello, Oracles. The market was ugly, and it's going to get uglier. We're kind of at a point right now where we broke through some thresholds that we thought we might hold. We did not hold. So we're going into correction territory. The NASDAQ right now is in bear territory. S&P's down 10%. So we're looking at points now where we're going to be getting into when are we hitting the bottom. So I don't know when we're going to hit the bottom. We are going through a time right now with Russia and Ukraine really pulling the market down hard. It might actually offset the sell-off that we were expecting coming in potentially March when the interest rates go up. So we might not see that happen, but we still have some pain to go through right now. So one of the things I look at is, as a new investor, when I first started a few years ago, went through a lot of learning and growing pains. I related to when I started with my racing. For those of you who don't know, I used to do obstacle course races. And when I did those races to start, I was going out there with regular running shoes. I had on cotton socks, cotton shorts. I didn't know what to prepare with. I was drinking straight water. So many different things that I learned over the course of a decade that just made me get better and better. And I went from the point where, I was able to barely get through races to where I was running 24-hour obstacle course races in Iceland and Sweden. Same thing goes on with the market here. Especially if you're a new investor, learn things. You're going to start off and you're going to make mistakes. You're going to find out that there's a lot of things you can do better. Maybe as the stock market's been plummeting, you sold. May not be a bad thing. Look at me, Kevin. He sold out and, he made the right decision. Big risk, but he took it and it paid off. But there are times where maybe you panic sell. Or maybe you bought in at a high. Maybe you're one of the people who bought Tesla when it was around $1,200. It happens. There's nothing wrong with that. If you're a long-term investor, that's still going to be a good price. But the things that you learn along the way are, okay, so I've bought up at $1,200. What do I do? Well, let me dollar cost average. Let me find myself some other income sources coming from the outside so I can invest more money as this dip keeps on dipping. Just little things that I've learned over the course of my own trading experience of if I make moves based on my emotions, I'm going to lose every single time. And so for me, I just follow what is the market doing? What is my long-term conviction on stocks? What is my outlook going here? And are the fundamentals of the companies I'm investing in going in the right direction? And if they are, then I'm not going to concern myself with it. I'm going to kind of play out how I feel the macro environment is trading, how individual stocks are trading, and do it accordingly. So currently right now, I like to have 5 to 10% cash on hand to be able to buy opportunities like this. I have been buying for the last 2 months, so I'm down to about 3.5% cash. So I still average in every single day, so I still invest every day. But at this point, I've been altering my strategy to invest a little bit less on the dip as it's dipping, just so I can make sure I have cash on hand, because we might be going down even further. The S&P may still have another 5 to 10% to go before it finishes correcting. We don't know. It could be ugly, but for those of you who are long-term investors, dollar cost averaging is still the wisest and best way to invest. Fortunes are born during bear markets. NASDAQ has gone bear. Tesla, which is one of our favorites here, has gone bear. So if the S&P goes down another 10%, that will also be in bear territory. And those are the times when the fortunes are built. Fortitude fathers fortunes. Maybe if you're female, I apologize, maybe it mothers fortunes, but I was going with alliteration at that point. So fortitude fathers fortunes. This is if you are strong and you have not paper-handed, and instead of selling out at this point, you've either been buying the dip or you're just holding strong, this is the time where fortunes are built. The reason they say this is because right now all PE is getting compressed immensely. Growth is getting taken out of every single stock that's out there. Any growth stock right now is getting beat up real hard. For instance, Tesla right now, forward PE based upon my projections for the end of the year with a 14.79 EPS, we are looking at a PE around 51. That's stupid low for, where we have been trading in the past. Some can argue and say, well, the valuations were super high to begin with. Maybe it should be trading around 30 or 35. True, maybe you can say that. But we are still at the beginning of an S-curve growth for Tesla, so going with a 50 PE still seems pretty darn low. So even if you're going to factor that in, let's say the stock does come down another $100. Now you're looking at PEs even lower. Once we hit this exponential curve of growth to go up with Tesla and all of these other growth companies, we're going to springboard right out of this. And it's usually the largest and strongest companies that fall last, and they're the first ones to come out of it. And so today we finally saw companies like Apple and Microsoft really start to take a hit from this correction that's going on. And Tesla was holding relatively strong compared to other growth stocks, but today definitely took a severe beating. So we're now seeing the last of the strong ones starting to come down. This is kind of a good sign and a silver lining, meaning that we are starting to get to the point where we might be hitting the bottom. And once we hit that bottom, those are the stocks you want to pay attention to, because those are the ones that are going to come out of this one first and strongest. They're the ones that are going to lead the way. Tesla is going to be one of them, because when Tesla comes out, they always move more than the broader market, which is why right now, with the NASDAQ being down 2.5%, Tesla's down 7%. Tesla's been getting beaten down from macro environment FUD, from so much headline news FUD going on. You know, these are just huge buying opportunities because the fundamentals of the company have not changed at all. The only thing that we have for actual headwinds is what's going on in Berlin. And even what's going on in Berlin right now is just headwinds from the factory opening up for future expansion. Yes, we're continually getting delayed for all sorts of different stuff for the approval of the initial opening up, but that is already set in stone. That's good to go. All of the water issues that they currently have going on right now are for future expansions, so that's not going to be a concern. So that's partially why Tesla has also decided to put on hold those expansions, because if this is the BS that they're going to have to deal with, then they're going to go look elsewhere. And so yes, while in this market, it is getting extremely frustrating. And my goodness, with all the tensions going on around everything, and here in New England, it's cold, it's winter, we're all getting cranky and miserable because it's February and we're just done with the cold. We just don't want to deal with it anymore. And then we've got Russia and Ukraine with tensions, and we've got COVID still kind of lingering, and just so much anguish and angst and anger going on all over the place. It would be nice to see some green. And so when we see the red in the market, it's just worse. And you know, we start getting margin calls which drop it. So when the stock market drops further, then people have their stop orders getting triggered, and that just drops the market even more. And it's like, when is this going to get relieved? Those are the moments when we are feeling like this right now of, when is this going to be over? That's the time to buy, because that's the time where everybody is just so beat down and you just really want to give up. Don't. That's where you double down and you say, you know what? I'm going to be wise with my investments. I'm going to invest a little bit more, but I'm going to invest wisely. I'm not going to dump all of my cash in, but I'm going to start buying this dip if you haven't been already. And that's why in a video about a month and a half ago, I had talked about, you know, the best way to do this and to get these fortunes from the bear market is to find outsourced sources of income. If your only source of income is the market, it can be difficult, especially during these times. But if you have cash flow generated from the outside, you have extra cash that you could dump into the market. Because as you put the money in, sure, some of it may erode away. You know, it's like the video that's out there of the raccoon that takes this cotton candy and goes to wash it off and it all completely dissolves. Kind of feels like that's what's going on with our money right now as we're investing it, especially as we're buying the dip. Every time I buy the dip, I put money in there and I just watch it go poof, goodbye. But it's not really. It's lowering my dollar cost average. It's accumulating more stocks and more shares for myself so that when we do come out of this, and we will, because we always do, as we come out of this, I will have more shares at a lower price, which means that my fortune and my portfolio will be significantly and exponentially larger in the future. That is how fortunes are built during bear markets. Fortunes aren't built during bear markets. Fortunes are flourishing during bull markets. All the money that you invested during the bear times really shines during bull times. So that's why you've got to invest the money now. You start investing money when Tesla's at $1,200, your fortune's not looking so good right now. You dump that same $1,200 in right now, your fortune's going to be looking much better. So again, we don't know how to time the market. It's impossible. But if you dollar cost average during these times of pain, you will get to reap those benefits when we go back bull. And so for all of you who have been holding through this, for all of you who have been investing and buying this dip, and even for those of you who have sold and you're looking for another entry point because you were taking that same risk that Meet Kevin did and said, you know what, I see the market going down further, I'm going to buy in later. Congratulations to all of you, because you held on strong, you've got the fortitude, you've made your wise decisions for your own portfolio, and you will be the ones who are going to reap the benefits of this in the future. Let me know in the comments below. Are you one of the ones who have been holding on strong, buying the dip? Maybe you were one of the ones who sold out. Let me know. Did you sell out all of your stocks and you're looking for an entry point lower? Let me know. I'd be interested to find out and talk to you guys. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.